Hey, welcome back everyone. It is time for another red hot covered call video. Hey look, I'm finally back behind the mic after a phenomenal weekend in Phoenix, Arizona last week with my son, watched a couple concerts, had a great time. I'll tell you what though, a lot of things have been happening since that last video I did on YouTube. And I'll tell you what, we're gonna talk about it today because I have to manage that really bad trade. See, 2 weeks ago, I thought it was a great trade and I even did a video on it. Now I'm feeling like I'm left holding the bag. But you know what? We're going to talk about how I'm dealing with it, how we deal with bad trades, but very specifically, how we deal with really bad trades. And we're going to talk about something that Jerry mentioned to me and I didn't even realize it. And I think you're going to like it. Hey, look, before we get going, if you've never been to my website, ctpdashboard.com, I want you to go there. I offer up all my free spreadsheets. Look, we have to keep the numbers in front of us. And that's why I created my spreadsheets. I use those very same spreadsheets to keep all the numbers in front of me, and I'm going to show you a couple of them here. You have to up your game. If you're going to do this like me, where we buy a stock, maybe we buy 2 stocks and we do multiple trades all the time, we have to keep those numbers in front of us. We have to know when we're profitable. And that's why I offer up my spreadsheets for you for free. And I even have how to use video. Now, hey, look, while you're off YouTube and you want to join our off YouTube discussion, you have to go to Facebook. Search CTP Dashboard. I want you to like our page. That's where we're having the off YouTube discussion. And I want you to join us. Now look, before we get going, I want to show you something in the CTP Dashboard. The CTP Dashboard is free. It's a great research tool that I created. I offered up to you for free. We loaded up with about 100 of the best trading stocks right now. And what I do is I sort the data so we can keep all those numbers in front of us so we can search for those great covered call candidates. The one thing that we want to do is try to avoid earnings reports. We want to buy great stocks and we want to do our research. See, when you pay for services for which they just send you information, man, that doesn't empower you, right? I wanted a tool that would empower me to do my research, confirm all my data. That's why I created the dashboard. The dashboard is for free. I load it every Wednesday and I want you to check it out. In fact, somebody's in there right now. You can see them right there. Look, I offer all this stuff up to you for free so to up your game. And if anything, it'll get you closer to getting in the game, getting your experience so you too can have success. Now look, let's talk about that success because something my man Jerry talked about just this week caught me off guard. Look, right now I've made $39,000 this year. If you remember, my goal was $50,000. Look, when I started this, all I wanted to do was make $1,200 a month. This was supposed to be an experiment in life. Could I, in retirement, make about $1,200 a month so I can make the ends meet? This is turning out to be much more than that. And right now I'm on pace to hitting $50,000. Now, I have some work to do, but hey, look, if my year ended right now, $39,000, are you kidding me? But more importantly, look at that over here. Right now I've made 17.5% cash on cash, beating the stock market. Now, last year I made 18%. Now the stock market was up 22%, but 18%, 17.5% this year? Look, without doing much heavy lifting, if you learn this strategy, you get excited, you get motivated, and you get your experience, you too can have this cash on cash success and beat the market like I am. Right now, I'm really feeling like I can do this every single year. And if I'm knocking down 17, 18, 20% a year, I'm doubling my money every 5 years without doing any heavy lifting. We've talked about this many times. We buy our favorite stocks, we write our covered calls, we collect the money, we move on to the next trade. Look, that's exactly what I do. I chiseled off a little bit of my portfolio. I use that money exclusively to write covered calls and sell cash secure puts. That money, cash on cash, is making me 17.5% this year. Now look, with your financial education and your experience, I'm telling you, I think you can experience the same sort of success. And let's talk about that success. This is unbelievable. Jerry's talking to me the other day. He said, look, do you realize over the past 2.5 years, you have knocked down $96,000? Now look, I don't profess to be a guru or a rock star of options trading, but what I would tell you is this. I have got my financial education. I watched the videos like you, right? I opened up my account, then I started getting my experience. Now, for me, that's some 400 and 500 trades later, right? And I put on the mic 2.5 years ago to show anyone that was interested the trades I was doing to up their game. Well, I have upped my game. I have pretty much handled any trade situation when writing covered calls and selling cash secure puts. Now we're going to talk about that here with my Alibaba trade. But look, it's about getting that experience, because once you get that experience, you don't have to pay the gurus, right? Really what you want to get that experience so you can have that success. I know I sound like a broken record, man. Success, success, success. But at the end of the day, that's what motivates you to stay in the game. Because like I've told you, I myself find myself getting bored. I don't watch the markets. Hell, if it wasn't for this channel and Jerry, I'm not even sure I would be this passionate about this strategy, even though I'm knocking down the profits. It is real easy to lose focus. But look, man, if you're in retirement, you can't lose focus, right? You have to make that monthly income to pay for those expenses in retirement. So I need to stay focused. I need to stay passionate, and I need to keep learning this skill. I am learning a skill for which I'm going to use that skill in retirement to generate that monthly income I'm going to need. And that's why I stay passionate. That's why I bring you the energy, so you will stay passionate and motivated to do this. Now look, today we're going to talk about how I manage a bad trade. More specifically, how I manage really bad trades. Look, on YouTube, you're like me. We're out there searching. None of the gurus talk about handling really bad trades, right? They don't want to really get that close to you, right? Well, here's the deal. That's not real life. That's not straight talk style. We're going to talk about it right here, because whether I make money in the stock market or not, it doesn't matter. What's important is I show you my trades, we talk about them, and you learn something. And that means when I make good trades and when I make bad trades. Hey, look, if you've been on my channel, you know I talk about a lot of my bad trades, because that's where we learn, right? And the important thing is to learn. Now, look, we're going to talk about Alibaba right now because I'm stuck in that trade right now. But I think I'm going to make it a green trade. Let's talk about that trade and the things that I have done to mitigate the losses. But right now, I still own Alibaba shares, and I think it's going to be a good trade. But look, see that chart? Yeah, I'm feeling that pain holding the bag. Let's talk about it. I'm probably going to go really quick here because I have experienced this. So for me, it's really easy to just go 1, 2, 3, 4. This is what I do. Okay, so if I go too quick, I want you to pause the video, go back, maybe watch it 2 or 3 times. When we buy that stock, right, we do our research. We have made that great decision. And then we write that first covered call. We're feeling good. We pocket that money, right? We're headed to the bank. I want to spend that money, right? Then the stock falls. If you've been watching my videos, you know the very first thing I do is I'm going to buy that option back. What does that mean? Say I bought Alibaba at 174X, which I did. I wrote the 180 covered call, got paid $3.30. Alibaba then fell about $5 and $6. That option I got paid $3.30 fell to about $1.85. Well, look, I want to alleviate that obligation of giving somebody my shares. So I buy that option back for $1.85. Now I own Alibaba shares. They're not covered. And if Alibaba were to recover, right, it moves back to my purchase price, I can write the same covered call collecting the same $3.30. I feel like I'm hitting a double, right? I do this all the time. Now, in the case of my current Alibaba trade, that's exactly what happened. Alibaba fell. I bought that option back for $1.85. I'm sitting there with uncovered shares. Well, that very next day, I wrote a 177.50 collecting $3.15. Now, Alibaba's not helping, right? It falls another 6 points on the China trade wars. So that option I got paid $3.15. It's now trading at $1.80. This is literally in 2 days. So I buy that option back. I want to alleviate the obligation. And now I'm sitting there with a stock that's down about 10 points. Now, Alibaba's volatile. It's a great company, right? The Amazon of China and everything. So I have no worries that it's probably going to head higher. It's done this many times where it's traded as high as 210 and fallen down as low as 170. So I think by me buying at 174X, this is a great buying opportunity. Look, Alibaba falls again. Now I'm trying to get a 172.50 for about $4. I mean, I'm just trying to make this a green trade any way possible, even if it's not that much. Hey, I'm not writing home about this trade, but I have to handle this trade. I can't just sit on my hands. So Alibaba doesn't rally enough for me to get that 172.50. So I'm still left holding the shares. At that point, I decide to buy some more shares. So I buy another allotment of 100 shares to lower my cost basis. So now I've reduced my cost basis. I'm holding a stock I want to hold. That's very important here. I'm not doing this with some willy-nilly stock that I know nothing about. So by buying more shares, I feel comfortable with it. With that said, though, I'm not going to overreach and buy multiple on multiple shares to try to make this a green trade. I'm going to stay within my discipline, and I'm going to stay within my diversification. Now, buying these extra 100 shares doesn't hurt me right now. So as Alibaba's basing a little and actually falling maybe a point or two, I decide that I think Alibaba's basing here. So what I do, I sell a cash secured put about $10 under the current strike price. I don't think Alibaba is going to reach that price, so I'm going to collect that premium, and I think the stock's going to go higher, so I'm not going to be assigned the shares. And that's what I do. I end up writing that cash secured put, and I collect about $2.50. And sure enough, because I put it in a very tight window of 1 week, the stock stays above my cash secured put price, and I never get assigned the shares. So I take that premium and add it to my cost basis. So now I've reduced my cost basis on Alibaba. So at this point, my cost basis on Alibaba is about 170x. Remember, I bought Alibaba at 174x. So by doing these things, not sitting on my hands, I've been able to reduce my cost basis. So now let's talk about two things that we might need to do here. Now look, I know a lot of you are in this situation. And in fact, I was just in this situation with Walmart. Look, sometimes we might have to dance with the devil. And this is where your education comes in. You have to have your exit strategies in place. Because if you don't, this is where you get snapped off. My man Jerry right now is feeling the pain with Win right now, and he's dancing with the devil. What does dancing with the devil mean? Here's the deal. I bought Alibaba at 174x. It has fallen so far that any covered call I write going forward trying to collect premium won't be above my stock purchase price, right? See, it's easy to buy a stock at, let's say, 174x and write the out of the money covered call. That's easy. You're going to have your shares taken away higher. You're going to make money. But when the stock falls to 154, now you're trying to write that covered call above your strike price. You're just not going to make the premiums, and it's not going to be worth it. So at this point, what I need to do is possibly dance with the devil, where I write a covered call, a tight 1 month covered call that's under my stock purchase price. And this is where it gets scary, because if Alibaba turns around and runs higher, man, there's a chance that it may go above my covered call strike price, but under my stock purchase price, and I'm going to have to give away my shares cheaper. I'm going to be losing money. That's where I need to have my education, my experience, my exit strategies, right? Because if I'm going to do this dance, I'm going to have to buy that option back. And chances are I'm going to add to my cost basis. So I've done this many times. Look, I do this all the time. So for me, it's not a problem. But for some of you cats, you may not have this experience and might not handle this situation correctly. The key here is you have to understand that if you write that covered call under your stock purchase price, you're going to be giving your shares away cheaper. You're going to be losing money. Now, on a side note, a lot of times people will email me, their stock had fallen further, and they'll talk to me about buying a deep in the money covered call. And the premiums are huge, right? And you're thinking, wow, you know, I buy the stock at 174, the stock's fallen a little bit, I rate a 150 covered call, and I'm going to get $20. This is great, right? Well, they miss the fact that they're giving away their shares at 150. And if the time value of that option, right? An option is real money and time value. But when you write that deep in the money covered call, the real money portion of that, right, that's going to be just straight real money. The time value is our profit. So writing a deep in the money covered call when the stock has fallen, hey, look, step back and reevaluate. Reevaluate the situation because you're not making money. So with that said, that's how we dance with the devil here. Now, I haven't had to do that with Alibaba yet, but understand that if you're going to dance with the devil, man, you better have your exit strategies in place. Now, look, I hate talking about this one. I have to talk about it. Sometimes you have to pull the ripcord. We've talked about this before. You have to have a discipline to where when the stock falls, it falls below a comfort zone. Man, you know, sometimes you just have to pull the ripcord, sit back, reboot your strategy, maybe buy another stock and do it again. Look, I hate doing that, and I had to do that a couple times last year. Now, in the case of Alibaba, it did fall. Probably should have pulled the ripcord when it was in the low 150s, but I didn't because I just felt that the only reason it was dropping was because of the recent China war news. So look, let's go to the chart real quick and look at it and do a recap. Before we get to the chart though, let's recap where I'm at with the Alibaba trade, okay? So as you can see on the left, I bought my original shares at 174x and I wrote a covered call there in the middle. You could see that. We talked about it. I had to buy that back for about 180. Then I wrote that next level down, that 177.50, and I got paid $3.50 for that. Had to buy that back as well. Then the stock fell. You could see on the left, I went ahead and bought some more shares. Then in the middle, you see I sold a cash secured put. So I'm doing a lot of things to mitigate these losses, right? I'm not sitting on my hands, which by the way is something that we could do. It is an option in handling really bad trades. I did that with Walmart and it turned out all right. But in this case, I'm not. I'm going to work this trade and I'm going to tell you, I want to make this a green trade. Now, as you can see, with my last open covered call, right now as it stands, I have 400 shares. I wrote a 177.50 and I got paid $2.50 for that. If my shares are taken away in 30 days, this will be a 5.2% cash on cash trade. Now, look, that sounds like a lot, but man, I have done a lot of heavy lifting to get to this point. That will be a trade I will celebrate. But look, we still have a long way to go because this trade is not green right now with the stock price being 164.70. Let's get to the chart. Now, I'm getting a little long with this video. I do apologize. But, when we look at these support lines, sometimes these are rock solid support lines where Wall Street will buy them up regardless, right? Well, in the case of Alibaba, because it's attached to China and there's so much negative news on China, sometimes support lines just aren't going to hold. But you could see every time it hits that support line, we do get a bounce. It just fails to hold and it just sells off even more. So at this point, I bought Alibaba down here where I thought we might get that rally back towards 180. Well, that didn't happen. So with Alibaba falling, instead of sitting on my hands, I decided to buy those options back, write another covered call about 1 or 2 deviations down, hopefully above my stock purchase price. Well, as Alibaba falls, it falls really low, right? This is where I'm really feeling like I'm getting kicked in the ribs. Now I just have to sit on my hands and wait. Well, I did the cash secured put. I bought some extra shares, so I'm mitigating those losses, reducing my cost basis from 174X to 170. So at this point, with Alibaba getting a little wind behind its sails, I wrote that last covered call, hoping that in the next 30 days, it'll go higher towards that 180 mark. Now, by looking at this chart, I have no real evidence that it will do that. What I'm really hoping for is that Wall Street sees that it's a buying opportunity and they buy it up, at least in the next 30 days, so I can get out of this, making this a green trade. Now look, before I go, if you're wondering what video I'm talking about, it was my last video right there, where I bought Alibaba about 174X, and I wrote that covered call. And I'll tell you what, at that time, and I'm sure many of you experienced this as well, at that time we felt like we did our homework. We feel good about the trade, we write that covered call, and man, we feel good. Well, sometimes things go bad, and it has nothing to do with earnings. And sometimes it has nothing to do with news. Wall Street buys and sells, and a lot of times they could just be taking profits. So you have to keep your emotions in check, have a plan, execute the plan. If you like what you heard today on this video and you want to subscribe to my channel, it's right there. Subscribe to the channel. It's free. And hey, look, if you like this video today, I want you to bang that like button. It lets me know you like what I'm doing. Until next time, I hope all your covered calls are profitable.
All I see is signs, all I see is dollar signs.